What's up, everybody? Now today I want to share with you something a little bit more degen, low cap, but still consider a real yield protocol. Now importantly, this is not financial advice but more of a knowledge sharing. Now this is Cap Finance. Currently they are giving 69% on ETH and 34% yield on USDC. Now if you are holding cap and you stick and you get around 11.5%. Now before we jump into the yield, we need to understand how the protocol works. Now CAP is a decentralized exchange for synthetic assets. Currently it only has two pairs, ETH and BTC. Now on CAP you can go up to a maximum leverage of 50x. But how does CAP ensures its liquidity? Now when a trader trades on CAP, it's trading against a pool. Now this pool is made up on ETH and USDC. So the pool of ETH and USDC is the counterparty of the traders. Now in other words, if a trader wins, they take profit out from the pool. But if a trader loses, the asset goes in. Now if a trader liquidated, partial of the asset goes into the pool as well. Now interestingly, when a trader loses, 100% of the position goes into the ETH and USDC pool, which makes it very attractive. Now I want to highlight that I got this info from Discord because these are not highlighted in the docs. So back to the yields. So these attractive yields are coming from the trader's loss because you are the house. Now a few things to note. Pooling is not risk-free. So in the case that a group of traders do a big win, then you might not get back your deposit if because they are taking profit out from the pool. Also when you do a withdrawal, there's a fee, 1% for ETH pool and 1% for USDC pool. Plus there's a 24 hours lock. So when you put your money into the pool, during that 24 hours, you cannot withdraw. Now, there are some leaders in this space of perpetual decentralized exchange. GMX and Gains are the earlier ones and are doing very well, as you can see from the trading volume. CAP has a market cap of about 12.5 million. So how do they differentiate themselves? By having no fees. So their aim is to build a flywheel with no fees, hopefully more traders, more volume, and therefore more liquidity. Now to sum it up, as a DeFi user, you can go to Trade Finance and trade because no fee and that's attractive. But take note that there's no stop loss feature and the liquidation is at 80%. Or you can go there to be the house, market maker, and join the pool. Again, pooling is not risk-free. The yield is dynamic. Therefore, as more funds come in, the yield will also drop. And in the case where there is a big win from a group of traders, then you might lose your deposit. Now, last thing is that you can also get cap, meaning you are bullish about the protocol, thinking that it could be the next GMX. But take note that there's no governance, so as of now, this token is really buying for exposure. Now, before I end, I want to share the numbers that I ran. So GMX has a P of roughly around 14.5, and for CAP, based on the current numbers, they have a P of around 9.87. Now this is because I take into consideration of the total revenue shares to holders. Now if you want to run your own numbers, you can go to Token Terminal and get your reference. Again, not financial advice. I hope you learned something today and thanks for watching. Bye bye.